Okay, good afternoon, everyone. This is Dilshad Dalawala. Welcome to uh, our Profit First presentation. And your presenter today is going to be Wendy Nguyen. I am just waiting to get a few more people in. I see some other people have joined in. Give me just 1 second to make sure I bring them in before we start. Let's do. Okay, so the people are chatting, which is great. Okay, so I will start the presentation now. So again, welcome everyone. We are here to listen to Wendy Nguyen about the Profit First book. She is a Profit First professional, and we will talk more about her and her company in just a minute. I'm going to start by introducing to you the agenda of today's program. So we will first talk about our sponsors for the program today, and then we will introduce Wendy, and then Wendy will make her presentation, and then we will have question hour session. So everyone is on mute, but you are free to type in questions about or any feedback you have in the chat box, and Wendy will answer those questions in the question answer session. So without further delay, let's get started. So talking about the sponsors, our very first sponsor and the reason for us to be together is the Goldman Sachs 10K program. I know we have some members in the group that don't know about the 10K program. They came from our promotion on LinkedIn and Facebook and other places. So I'm just going to briefly introduce the program. So this is a small business program that Goldman Sachs started a few years ago, and they have trained almost 10,000 small business owners in training in leadership of their business, and they have been trained to work towards growing and improving their business. Basically, the concept of this program is that the job at the top, the business owner job for a small business owner, is pretty lonely. So the goal of the program is to get other business owners, other entrepreneurs, small business owners together in a group to train them on things that they need for their business skills, like accounting, marketing, brand awareness, negotiation, all kinds of different topics that we need to have to be able to successfully run and grow our businesses. And then also then we create a community where we support each other. So for that reason, they have these programs in 20 different cities in the US. And of course, they have other sites around the world that are also giving this program to business owners. If anyone's interested in this program, they can go to 10ksbapply.com. If you can't write it down right now, don't worry about it. You can, I'll put a slide at the end where this link is, and also you can feel free to email me anytime and I'll be happy to provide you with all the information. The other sponsor is our 10KSB Alumni Book Club. So as alumni, what we do is we get together and we support each other and we create community that provides us support and provides us ongoing inspiration and information. So this book club, I had actually formed yours truly, had formed this book club about 6 months, 8 months ago, and now we already have over 500. In fact, today we have 535 alumni entrepreneurs in this book club. So we read books together, we discuss those books, we talk about books, and we also have presentations like this one today about a book, or we bring an author in. So today's presentation is about the book Profit First that we are reading as a book club this month. We have started reading last week, this book. So you can see, the 10K alumni, we are always trying to stay up to speed with all the great things that are happening in our world. Alycom Business Solutions is my company, and I am Dalshat Talawala, your host. Um, I have been in CRM consulting and business technology consulting for over 20 years. So we are experts at creating solutions, sales and marketing and social media marketing solutions for our customers based on technology and based on services. So at this point, we are working with Sugar, HubSpot, Goldman, and there's one more we just added, Pipedrive, um, to our offering of CRMs, and we're constantly adding new ones every couple months. So if you are looking for a CRM, or if you're not happy with your CRM, or just want to know what a CRM is, feel free to drop me an email, and I will be happy to give you more information. And of course, you can visit our website at makecustomersforlife.com. So that's about us. And so the next thing I'm going to do is I'm going to actually turn it over to Wendy. So Wendy, I am going to stop sharing so you can share your screen. Give me 1 second. So go ahead, Wendy.
Hi, my name is Wendy Nguyen. I'm a CPA, CEO, and founder of TNC CPAs, specialized in operational and financial consulting. We have 4 offices surrounding Houston areas and team members residing in Texas and California. Most businesses are starting out from a great idea, is acquired of other businesses or inherited from the parents. There are usually lacking strategies and execution to grow the business or keep it alive. Failure rate of startups is over 90%. TNC is a business planning and financial management consulting firm that helps businesses and nonprofit organizations examine and grow successfully. At TNC, we strive to keep it simple by doing what's right and having fun in the process. Please explore our site, www.tnccpa.com, to learn more about how TNC can help your organization succeed. We offer a wide range of services from accounting, tax compliance, assurance services, outsourced CFO, outsourced COO, and growth strategies planning.
Hi everyone, can you hear me? I guess I have
Yes,
to.
I can hear you.
Okay, all right. So, well, thank you very much, Dosha, for the introductions, and I'm really excited. Let's get going to what we are, here for today. Especially, you got a chance to read the book, Profit First. I know there are some of my team members online as well. They are hearing me talk about it, and this is going to be more in depth. So who would remember that when we go through the book and there was talking about axioms, and axiom is really is we got addicted to a that somebody tell us in the past, the generation in the past tell us that is true, then we just carry it over and thinking that is true. For me as an accountant, it has been always about gap, keep your book record on accrual basis, on your cash basis, so to me that is what has been in the method I have learned and practiced for the last 18 years, almost 20 years now. And it just shocked me when I came to read the book Profit First. It's given me a new thinking and how I have applied to my business. And also I'm really excited to help anyone who's ready to implement that as well. Because reading is just going to be 1% of what we're learning, but practicing and sharing with others, I think that's where the success will come. So really my story, we started our business is in 2018 and we have been growing. And at the same time, we're growing and we're spending. It's just that normal. I don't know who still remember when you first have your first job and get your salary and you're like, I don't know. I mean, I remember when my husband and I got our first job back in 2000s, and the salary that we make at the time, we were like, this is super. We used to only have 1/5 of this to, 1/10 to spend. So, but as we grow, get more money in, we get more demand, nicer house, nicer car. So it's just businesses, we're kind of doing the same thing. So we grow, we spend, we grow, we spend, and come to a stop moment when I really looking back, it's like, wow, we never thought differently. So let's get the example of doing exercise. When we talk about if we want to be fit, the first thing that is come to our mind is we need to control our eating, and then we have a better habit of eating. So we would go toward, I'm going to jump in and be a vegetarian or eat a lot of veggies. And so we're looking at the plate, the veggies, the temptation, the frequencies. That is how the routine that is going to get into being fit. I don't remember as far as when you read the book, how far along you guys have going in reading the book. And feel free to chat while I'm speaking as well if you have questions, if you want to slow down. So with profit first, there are 4-step processes that is going in place. For each business, when you read the profit first, you was like, where do I go first? And first of all, you need to figure out what your profit should be. I mean, this is what your profit should be. It's not is what it has been. So there's a two differentiation there. What you think it should be, what has been going. And some people may even say, well, I just work in my business for a long time, but I really never seen profit. Or actually when you meet with your accountant and your accountant say, hey, congratulations, this year your net income is $100,000 in net income. And then you look at your accountant and you're like, you're crazy. I don't see $100,000 sitting in my cash account. I don't see it. It's where's the cash? I mean, where's the money go? I mean, I had a business that I do consulting, and they have a net income of $1 million, and clearly that $1 million wasn't in the bank. And the owner just called me and say, Wendy, I need you to audit it. I need you to audit the numbers. Where is my money go? And so this is really where it's going to be an eye-opening when you go through an assessment of where your profit has gone. And once you had the concept of the profit, then you start setting up different bank accounts, remove temptation, implements. I'm gonna go in all of these 4 steps one by one, and we're gonna break it down so you can see it's a little simpler task than you think it is, and we just need to get action in. Okay, so first we're talking about a small plate. Is your profit should be, and the small plate, when the money that is coming in, when you got $10 in as your revenue, you need to know how much of that money is part of your profit, and you would put profit first. So now you're going to take that chunk of money and start allocating them into different buckets. And in the book, Mike mentioned about the envelopes method. And I don't know who in the audience that is how your grandma or your parents have kept their money that way, that when they have a specific envelopes that have for mortgage, an envelope for your education, an envelope for food, and an envelope for the day-to-day. So as that small plate concept is very similar to that as well. Let me see, I think there was some chat come in, but I'm not seeing it.
Wendy, do you see the chat?
Let me see.
If you go all the way to the top, you know, in the green toolbar, click on that. There should be a chat option, or even at the bottom, there should be a toolbar that lets you click the chat.
Yeah, I went to it and it didn't. It's just, I've been seeing it. That's so weird.
Are you in the, you must be in the full screen mode. That's why maybe you're not seeing it.
Yes, probably. Okay, I see it now. So, okay, yeah, I see the chat. So, yeah, so I mean, it's a lot of immigrants come in with have nothing on our hands, and I mean, people in the past that have nothing, they start from zero, so they're using the envelope method.
Yes, I used to use that envelope method with my son also young, and then of course, just like you said, I started making more money, and of course, you know, then that good practice stopped. So
Yeah, so I think this is resume to share. Can you still see the slide? Okay. So that's where I talk about these small plates. And one thing that Mike had put together for us, where if you remember the 4-step process that I talk about, is the knowing what is your profit should be and make it a goal that you can hit it. So he come up with, based on a lot of statistics that he had pulling together, and he say that, you know, this is the targeted, this is the ideal percentage of how you would allocate. So, you know, company that have revenue 0 to 250,000, you should pay the owner 50% of that, and you still need to allocate 15% for tax and 30% for operating expenses. And the profit is only 5%. So this is what I call it a benchmark, because when you do an analysis of what your current business, how much net profit that you receive, how much you pay yourself, and from there you will compare what you currently have to the benchmark, because it's the information become irrelevant if there's nothing to compare to. I mean, it's just the data that we have is only making a lot of sense when you can't compare apple to orange. So
Wendy, I have a question.
yes.
When you were saying real revenue, so what's real revenue versus revenue? So in my business, like we resell software and we do consulting, right? So when we resell software, a big chunk of that goes to the vendor whose software we're reselling. So that's not our revenue. What's the difference between the real revenue is the revenue that you have all year long? Is that what you're meaning here?
No, so that's the definition between a dollar that you receive versus the real revenue. So going back to your example of your business, let's say if you collected from your customer $100, and that $100 you have to pay your vendors 50% of that for the software subscriptions, then your real revenue should only be the other 50%.
Got it. Okay. I just wanted to make sure that my understanding of real revenue was right. Okay. Got
Yeah,
it.
because it's like, for example, if there's a construction business but you are not the subcontractor, let's say you're general contractors, and you're bidding a project, and that project may be a $30 million project, but you're gonna have to subcontract all of that work out, and you're gonna need to pay your subcontractors. And at the end, your net profit from that contract that you will collect for cash is only $3 million. So $30 million, and you only get $3 million of after paying your subcontractors. Then your real revenue is 3 million and it's not 30 million. And so you will take the 3 million and do the proportionate of the percentage accordingly down below, because otherwise it's going to be very misleading of you have a $30 million in revenue where you're going to be in the column F, and you was like, well, where's my money go? But it's your application that you have to pay your subcontractors, or if you're in a manufacturing and you have to buy a lot of materials, so you also have to take out the material costs. And your real revenue, the definition how it's identified is very different from the regular accounting, because the regular accounting would have your revenue minus your cost of goods sold equal to your gross profit. And that's where people can get confused, that is it real revenue means gross profit, and it is not. So is the real revenue is just the subtraction out of subcontractors and materials. So those are only the two items that will be taken off from the revenue on the top line.
Okay, got that.
Yeah.
Thanks.
Good questions.
Thank you.
So now when we go to the plate, and there are, the author suggests that we would have 5 bank accounts. One bank account, we call it like the serving tray, that where all of our income coming in, it will go into the income. And then after that, you will start splitting. If you receive deposit $100 today, and you say your profit needs to be 10%, then profit first would mean that you need to move that $10 into the profit account, and then slowly allocate it to the rest of the other plate. And it's very powerful when you're looking at the orders of how it goes. Is you know, every single one of us as a business owners, we are so focused in growing our top line, and because it's a top line, it's the revenue, it's the income. But then the order that we have in the past, it was thinking just very gap concept, that is taking out all of the expense, then hoping and wishing what left gonna be profit. But now we really have to take control back in our hand and say that no, I need, if I deposit $100, I need that $10 to be my profit. And you put that $10 into your cash account profit right away. And it's giving you a perspective, and no longer, well, profit gonna be my last thing to know about when my accountants close my book. You know, it has always been the case. I mean, I'm an accountant, so I know that we practice it. So that's where the new thinking is coming in. So going back to the example of the veggies, it being fit, you know, so when we say about, okay, we're gonna be fit, then let's making sure that in order to keep us full, instead of eating all of the carb first, we're gonna eat veggie first. So it's a very similar, that is going back to this is an analogy of the profit first. And because if we put veggie into our body, so then we are not too hungry, and we not start consume everything else like snack and carb and fat, you know, into our body. And so we kind of slow down the process and make us think a little bit more of what's next I'm going to eat. So that's how it's the veggie first is allocate first, and that is equivalent with profit first. And going back, and again, you know, so Mike always say that is, even with his book title, he goes straight to the point, profit first, profit first. So deposit coming in, And this is how the order of everything is allocating. And as you can see, operating expenses is the last item on the dish. And a lot of us, business owners, what is the last thing that we have in mind is when the accountant close the book, the tax preparer done with the tax returns, and say, hey, it's time to pay tax. And you would sit there, where's my money go? I don't have any money to pay tax. So it's very, very normal that most business owner probably on some sort of installment plan paying their tax right now, because the cash has gone back into the business, has gone somewhere else. So again, if we put the tax into a very specific bucket and not even touching it, this is also applicable with business who collecting sales tax, and it's always a very hard feeling when come to the 20th of the following months when you have to come up with the money to pay for the sales tax. And so business who collect a large amount of sales tax, I'm suggesting that it's going to be an advance profit first by having an account that allocate the sales tax into it, so you won't touch that cash or seeing that cash balance in your regular operating accounts. And one of the I relate so much into this, is going back to the book where Mike has an example about the toothpaste. And if you recall, he said that when our toothpaste are full, if we just pull out the toothpaste, put on our toothbrush, and if we drop a little bit down the sink, we're like, oh, you know what, whatever, I'm just gonna get a new one and just put the toothpaste on. But when it's come to when the toothpaste is almost finished, then that's when even one drop down the sink, you would be concerning, and you're like, oh my gosh, what am I gonna do? So it's like, I need that so that I can get my fresh mouth today. So I think people can really relate it to this. So Tina has a question about the sales tax from revenue to come up with real revenue. Well, the sales tax would never be recognized as revenue in the first place. So it should not even be in there. So that's why we need to have a separate bank account for sales tax. And the minute that we got money coming in with the sale and a portion of that sales tax, then it needs to be excluded. But as far as the accounting wise, sales tax were never recorded as revenue. So who has been used to work for a company before where she have 401k set up? I do, and I had been in corporate America for about 18 years. And I have, every workplace that I came to, I always have the 401k there. I don't necessarily roll them over, but then I always contributing into my 401k. And I come to a shock because it's like, oh, that was the amount that I've contributed in there over the years. I never look at it, and it's just, it's grow. So thinking of profit first is very similar to, as we are business owners and we are too busy to really, we were so focused in the sales that we forgot about our own 401k or our own business profit. And so if you used to do contribution for 401k, now thinking of your profit is also the same thing. Whenever you get a check in for your business, then you also need to take that portion out and put into profit, just like a 401k deductions. And one really cool thing that Mike has talked about is that business owners, we manage our business based on the bank balance. Most of us are not accountants, and before I run into Mike, I also was telling you that as an accountant, I also running my business based on checking my cash balance and see if I have enough money for payroll. So this is not something new. So, you know, bank balance accounting is something that we business owners are really operating in that premises. And you can see how powerful it is when it's come to when you open up a bank account and you have 5 different bank accounts, and one of the bank account is called profit, and you see that money can start, you know, growing instead of see one big balance in your bank, and you have to sit there and calculate, okay, how much I'm gonna pay for pay down my line credit, how much is gonna be for payroll, how much gonna allocate for my operating expenses. And so you just do all of that in your head. And now would have multiple bank account balances, then you don't have to do that. It's ultimately they are showing up for you when you review the result. So when, and you know, the author, I don't know how many of you read, but I do. So for Profit First, I listen to the Audible, and also I read the book. And when I listen to the Audible, the Audible is also actually being done by Mike himself, and he had a lot of sense of humor in there, and he would talk about the Frankenstein stories, and is where we always seeing that is the more sales that we have, the more expenses that we are dipping into it. And what left is just profit. And we kind of ignore profit at the end of the day. And because we just focus so much in sales. One of the things that Mike message is so profound is because our habit of manage everything based on the bank account balance. So he's suggesting that we open another, we go into a different bank and would open the account there. So that way, when you move the money to the profit account, you also move that money into a different bank. So you don't take a look at that bank every day, and it's just remove the temptations. I mean, it's going back to being fit. And if you have a cookies in front of your, you know, the cookie jars that in on your office at your desk right now, I'm sure you're gonna start consuming it, and it's not gonna get you where you want to be. And so it's really remove the temptation is why we need to have a separate goal, not only have a separate bank account for Profit First, but also have go into a different bank. You know, if you have a Chase for your operating expenses, you may go down to a community bank, a credit unions, to open up the account there and put the money for profit in there. And also tax, you know, the tax that the business or the owners have to pay at the end of the day. You're also going to put that in that separate buckets. This is something that Mike just shared recently. And so the reason after I reading the book, I was completely in love with his methodology. And so Mike have a university that he would train all of the accountant CPA to become certified Profit First consultants. And one of the things that is hit home for me is that as a business owner, I mean, not only be an accountant, but as a business owner, we are always in the survival trap. And I mean, you can see in here that as we have payroll to cover, we have to think of new products, you know, to make more revenue. We hire experts, and we always operate in a mode of crisis. So we lose track of our visions. And because we're always in the survival trap, so it's hard for us to think that, oh, actually have profit from this company. Actually, I can take the profit from this company. But if we can operate in the profit first, it's gonna help us to not be in the crisis. And this is gonna hit home really well with all of us going through the pandemic right now. This is another very powerful graphic that you can see as a business owner. I mean, we started out with nothing, and we would, you know, this is where the line of the cost that would go. If you can see, you know, the higher the cost, the revenue go, the higher the cost would also go. And if we're able to control our profit, then we can make it correlating, you know, as far as the income and the cost go. And there is the time that is right here when our revenue are dipping and our cost did not dip. You know, just like, let's say we was offering a new revenue services that wasn't in our wheelhouse, and we would hire an expert for it, so that we can get that revenue in. And but all of a sudden the customer come back and say, oh, I don't need that service anymore, but you still have that person on your payroll, and so your costs won't drop, but your revenue immediately dropping. So that's because we just operate our business out of the opportunity we see there in 10 minutes, and then we make the decision for the next 10 months. So it's, I don't know how many people can relate to this, but I was, you know, in that mode for beginning of this year when my business has grown triple, and I went ahead and I said, I start spending money on marketing, I start spending on hiring people, and I'm like, oh no, I need to, when I reading Profit First, and I'm like, oh no, I need to rethink everything. And good thing that I think about it right at the time before the pandemic come, and you know, like we share about the Profit First book. So it's coming to the right moment. And I have to applaud anyone that come online today to listen about Profit First, because probably all of you are worried about what's about my revenue. You actually don't have profit this month. It's going to be a loss this month. But if you follow through the process and you see the light at the end of the tunnel, there is light. So going back to, so remove the temptation, you know, outside, out mind. Again, this is what he was talking about, is 5 bank accounts in the same bank, so you can transfer money easily, quickly when you got deposit coming in. And the minute that you have it, then you would bring your profit first, you know, over to the second bank, and also your tax to the second bank. So that's way is, we as business owner who are managing our cash on the bank account, then we can easily ignore this because we put it out of our sight. The question is anything when you creating when you come up with some new things that you want to go into, what's most important is going to be the frequencies, how often that you will do it. And when you do it, it's had to be so simple that you would go in it first. One of the books that I get to read before Profit First was called Atomic Habits. And in the Atomic Habit book, the guy was talking about how if you just change 1%, you know, every day you just change 1% of something that you've been doing, and accumulating over 365 days, you will be able to see January 1st to December 31st, you're going to see a significant change. But every day changing 1%, you probably don't see much of an impact. But the frequency of a daily, that's what makes it going to be so powerful. And it's simple. So that's why it's, when you create an income account and you allocate the money into Profit First right away, then, you know, creating that routine, you're going to start seeing the reward. Even one of the things that Mike mentioned is like, even if you don't have profit and you say that then let's start with very simple, just 1%. So if you got $100 deposit from your customer today, if you take $1 out, you won't feel any pain, for not having that $1. But if you put that $1 in and then it's trickling into until at the end of the year when you got $100,000 deposit in, that's when you're gonna start seeing now you're actually building up a $1,000 profits, even though your business is still running from check to check to check, but you don't feel the impact that much. The 10 and 25 rule, I'm not sure how far all of you have reading the book. This, as far as being an accountant, I love this because most business, we are constantly in the pressure of paying bills and staying on top of our bills and what's due next. So Mike share a way that say, but if we just say that on the 10th and on the 25th, that's when we are paying our bills, then at least our mind can be free to do other things until we have to worry about, on the 10th and the 25th that we are actually sit down and paying all of the bills. And if you do, and you can pick a different date, but if you do pay your bill twice a month instead of every week, you have to think about what bills to pay that week. It's taking away your time, and versus that precious time that you have, you can actually read books, you can actually innovate, you can spend a little more time with your employees or spend a little more time with your customers and not so worry about paying your bills. So he just come up a way of being more methodical in staying on top of paying bills, and by the 10th and the 25th, you're making sure that you don't go into the rhythm of defaulting or paying late fees. It's one of the tips that Mike has put in there and as part of the book. So this is, come to the last piece is the Profit First book. I think it's an easy read book, but to really practicing it and to follow it is still, you need an accountable partner. And it's very challenging when you do something and you have no one to show the result to, or you have no one that hold you accountable. Did you make a deposit into that bank account? It's make it harder. And so I would say that once you decide that you're gonna go all in and try to apply Profit First, you need to find a partner who also understands Profit First, and that person and you can hold each other accountable. Because the other thing that we will talk about is it's gonna come into a quarterly adjustment. I mean, like today, when you allocate the profit, you maybe allocate just 1% into your profit because you have been suffering loss. But 3 months from now, you say, you know what, I can live with a 2% or 3% profit. I can do it. So that's where you would have a roadmap, and then you would change your percentage slowly to get there. Just going back to a 401k contribution mindset. Like when I finished reading the book, I immediately talked to my partners, Mimi, and she's my CFO for the business. I say, Mimi, you need to hold me accountable, and every time I deposit money, I'll present it to you what is in our profit account. It's feel really good in seeing the differences. So it's, and just like thankful that Dusha have to come up with today's webinar, so we can decide and make a commitment to hold each other accountable. And I think the Profit First concept is just not only applicable to business, it's applicable to all of our personal finances as well.
Wendy, I have a question.
Mm-hmm.
When you're talking about accountability partner, so what do Profit First professionals do? What's their role in this?
Yeah, so their role is, there are 3 steps, in their role, first of all, they'll sit down and they do an assessment with you on your financial for historical, what's the percentage has been the owners pay, how much you've been paying for tax. So they come up with what is your percentage. And so from that percentage, then is the first step is the assessment. And then they'll work with you to coming up with a plan to say that this next quarter, what should be the percentage that you are shooting for? I mean, at the end of the day, we want to go into the target percentage allocation that Mike have tell us. Let's say, for example, with a service business or wherever business, we say that the profit need to be 15%. But let's say if you do today with your assessment, your profit is only 10%, then you'll be shooting for 15% of the profit. Because if you think about every business owners, we need to know what the valuation of our business at any given point in time. And in order to determine the valuation of our business, it depends on your cash flow. It depends on how profitable you are, right? So, I mean, if anyone decide to buy stock, you're going to look at a earning per share. You're going to look at the dividends. And that's going to be the first indication whether you're going to buy that stock or not. So for the profit first consultant, first is the assessment. Second is building the plan. And then once the plan is built, then the profit consultant will be the accountable partner and meet with the business owner every quarter to see if you hit that target, what's the actual, what's the challenge. And I bet, each one of you, and you probably as a business owner, you're already maybe going through this, is with the COVID-19, now all of a sudden you're going to look at your expenses and start to see where can you cut it, where can you trim it off. And so with the implementation plan, is almost guaranteed that you will find a way to cut at least 10% of your operating expenses cost down. So that way you can give more percentage into your profit account. And so that's the profit first consultant. What they do is also they're gonna look with you line by line item in the expense categories and help you to see which one to cut, which one to replace, and which one is gonna be helping you to yield additional revenue. That's kind of like the goal. So it's a 3-step assessment, rolling out a plan for implementation, and then the final is monitoring that plan.
Okay.
And,
yes. So do these professionals have to be our accountant, or can we have a different accountant and just use the professional for this purpose?
Yeah. So that's a great question. Most of the people, the first thing that you would do is you talk to your current accountants and ask them, hey, are you familiar with the profit first concept? And because they need to understand what you try to achieve in order for you to achieve the objectives. Because otherwise they're going to say, well, you're going to open 4 more bank accounts, then I'm going to charge you additional money because now I used to do bank reconciliation for only 1 bank account. Now I have to do bank reconciliation for 4 more bank accounts. So I need to charge you more money. And when they mention that to you, which means that they don't understand your objectives. So that's where you need to have your accountant or somebody that willing to say, you know what, that sounds like a really good idea and I want to learn more about it, and be willing to work with you in that case. I mean, that's one way to do it. Talk to your current account, see they're going to be on board. If it's not, then you can work with the the profit first consultant just on the very high level, very strategic, and you're still gonna have your bookkeepers do whatever they are doing as usual. Um, you can definitely do that as well, but it's really important to have a clear communications, and you want it to be in alignment. So does that answer your questions?
Yes, yes, thank you. We have more questions as well. Sorry, I thought your slides were done, so I'll let you finish your slides and then we'll go through the questions in the chat.
Yeah, we're almost done. So, going back to when we talk about, I love this triangle that Mike has recently shared. And because he said, well, now is because of the COVID-19, people start going through and cutting their expenses. And you have to be really, really careful. Sorry, I find one error in here. I'm gonna change it, the slide before I email it. So it's when you cut your expense, you have to be really careful of, if you cut, a staff members, and that staff member have been generating revenue for you, which is the sales, then you have to think in twice. If you're gonna pay the staff member, let's say $50 an hour, and they have been generate $100 of sales for you, then the answer, should you cut it or should you not, right? But if they've been charging you $50 an hour, it's costing you $50 an hour, but you can only sell the service for $30 an hour, then there's a high chance that you will cut that person because you want to protect your sales. And the next is that you're going to focus in your profits. And going back to, if you're going to pay somebody $50 an hour and they only going to generate $30 of sales, then it's hurting your profits. And you can know, this is the hierarchy for you to decide which expenses to cut. And this one is, sorry, it's say order, it should be operating expenses. It's not mean order. It's what is the minimal that you can afford right now to continue to have your sales, and that's operating expenses. And a lot of us, with the COVID-19, you are forced now not going to be in the office. Then you're going to rethink about your rent. You're going to rethink about, maybe I should let half of my employees working from home and have a smaller office space so I can reserve on paying less operating expenses. And we talk about there are expenses that you would pay, to create impact or create legacy for your business. And, all of this is very possible, but first you have to be profitable in order for you to start trickling the money down to making an impact or having a legacy. And most business owners, we are visionaries. And because we're visionary, once we have the sales, we're gonna put the money into legacy and impact. That's what we do before thinking about getting the profit. So it's a good triangle, at least for all of us business owners who we can be very scatterbrained. I would say I'm gonna be the most person that with the ADHD symptoms, because it's just, we can think of 10 things on our mind, but this is gonna give us the focus on what should we do next. Okay. Oh, I'm sorry. I think I'm go over the time. So let's dive into question. Maybe we can unmute and people can ask questions.
Okay, sure. Let's see, who wants to go first? How about we try, I'm gonna unmute everyone and see what happens, okay? If there's too much noise, then we will, I just don't wanna have too much background noise, so let's see. Okay, everyone is unmuted. So who wants to go first? Philip, you wanna discuss your experience with the program?
So Sabrina has a question. What are the recommended profit margins for a service-based business? And Sabrina, as far as the service-based business would be the cost of the employees, the payroll, you would expect to get a 1/3. You know, 1/3 of your cost for the revenue would be 1/3, and then you leave another 1/3 for operating expenses. And so at the end of the day, you're gonna have profit plus over.
Oh, what was that?
1/3.
Go see what that was.
No, that was me. I fell.
So the target allocation percentage that Mike have is applicable to all of the business. It doesn't matter whether you are service-based or you're manufacturing. And so that's why it's important for you to know what is your real revenue. And especially for service-based, if you have independent contractors, then you would take the revenue and taking out your subcontractors first to coming up with your real revenue. I hope that answers your questions.
Okay. Let's see what other questions do we have. And I have put up the slide that has all the information and everyone's phone number and stuff, so y'all can get that. And see, let's see, let me see chat. So who else do we have? So Sabrina had that question.
Do you
And,
guys want to do an exercise and see if you understand the book? Mike have a really good cheat sheet as well. I know we ran over the time, and if you guys want to do it, we can open up and do an exercise together. If not, I can email it out as well.
okay, people, please put your feedback in the chat. Do you want to do an exercise, or because on the East Coast, it's already 5 o'clock. So is this good, or do we want to do an exercise? Karen said yes. Okay, Beatrice said yes. Beatrice, sorry. Okay, so many people. Okay, let's do that. So Wendy, you need me to unmute everyone?
I need you to give back the screen to me so I can put the exercise up and people can respond in the chat box, okay?
Okay, I'm going to stop sharing. I've stopped sharing.
So. Going to share.
Can you share your screen? So at the bottom of your screen.
Yes. Okay, so profit first. Society is addicted to what?
Give me a second. I'm sorry.
Mm-hmm.
Okay. Spending. Philip said spending.
The correct answer is axiom. It means if the prior
Wendy, we can't hear you. Say that again. Prior what?
So the next one is gonna be if the prior, the answer here gonna be if the prior generation say it's true, the current generation assume it to be true. So,
well, whoever said this has never raised kids. They've never had teenagers.
you know, this is in the bigger concept that I don't know how many had to, you know, work with the baby boomers or the baby boomers themselves. Is I think a lot of that we will learn that, well, if the, I don't know about you, but like when somebody say that I'm gonna go and start open a business, I mean, in the old days, it used to be, well, the first thing that you're gonna do is go and open up 5 locations an office to head a business. So it's kind of the norm, but of course, there's revolving, and it's just like when it first come out and it talked about, the earth used to be not round, but the earth is flat. So, and I think what we learned from COVID-19 is there can be a lot of changes, and that is completely changed the whole generation of thinking. So, what's the percentage of business that under $25 million revenue would survive check to check? Can anyone give a guess? %80%. So in the book, it's 83%. So it's very close. Yeah. The second question is, profit is not and profit is A. As an accountant, I mean, I see people book and close out the financials, and we were waiting, or a lot of you were waiting for your accountant to close out the book, and it's become an event. When you meet with your accountant, then you would say, oh, we got $100,000 in net income. And so that wasn't it was an event when you sit down with your accountant and really looking at the number. So the question here that Mike tried to help us to tell that profit is not an event, and it should be a habit. So we need to create a new habit. This one should be an easy one. The 5 foundational account played a profit first are. What are the 5 foundational accounts? Hello? Okay. Profit, operating expenses. What else? Yay, Philip remember the book and remember the slides. Yep, that's correct. Income, OBAX, profit, tax, owner. And I would challenge next time Philip would think income, profits, tax, owner, and then OBAX. So the income account acts as a, what you would call it? A serving account. You only deposit income into it, and then what do you do with that account? Distribute. Yep. One thing that I glaze over is digging into Parkinson's law, and which Mike has mentioned a lot about it, is Parkinson law. The concept of Parkinson laws is the leverage, the behavior of make do with what you got. And I think, well, as a mom, I can only talk to from the mom standpoint. I mean, as a mom, you always have to really make do with what you have, to get your kid to school, to make dinner for the night. So going back to the Parkinson law, is because we are growing our revenue number, then we ultimately spending that money immediately, because that's what we see available to us. So we gravitate into the Parkinson law, and so that's why we have to limit us and seeing how much income that is coming in as far as cash. So that's why we can control our spending. So yeah, the answer to questions number 5 is Parkinson's law. Okay. Number 6, the blank of how things are presented to us dictate our use of those things. Can anyone guess? Number 6. Dusha, can you unmute Phillips, because it looked like, yeah, the order or the sequence of how things are presented to us dictate our use of those things. Phillips, if you want to share your experience of how you use Profit First and how long you've been using it.
Philip, you're unmuted.
Okay, yeah, thanks. I started this system in June last year, and I tell you right now, I'm extremely grateful that I did. I can't imagine that I would have had any money stockpiled at all had I not been doing this system. And right now, I think just depending on how long this COVID-19 issue goes on, it seems like my business will be okay from having money put aside. So that's the first thing that has been on my mind. But it was very simple to implement. If anybody's considering it, I just went to, I bank at Wells Fargo mostly, and Wells Fargo was happy to set up all the bank accounts that I needed. And then I set up at a community bank, I set up the same for my personal expenses. And so I have, I think 7 accounts for my personal. So I do the same thing, allotting certain percentages out of the income account for my personal. I think that the beauty of the system is that it's in percentages and it's not dollar amounts, so that, yeah, you know, I still just do 1% in profit. I hopefully can be able to lift that up, but 1% is way more than I ever had before with profits. So yeah, I don't know what else to say about it, but it's easy, and it's also super fun. I love the allocation, and I love just watching the different accounts grow. You know, like my tax account even, I love just watching that grow and just knowing that I have enough money to pay taxes and more in there. So that's pretty cool.
Yeah, and so for your Profit First account, have you done any distribution to yourself, or you've been using it like a vault?
The profit account itself. Actually, what I did at the end of last year, I just had a couple $1,000s in it, and I just took my whole company out for a lavish dinner with all of their families and spent most of it on dinner. And I had never been able to do that before unless it was just coming out of my own pocket. And that felt great. I loved it.
Yes, yeah. So Karen asked you what type of business you have, Phil.
Well, I have it's a medical massage therapy clinic, and we have about 20 people working there.
Oh, wow.
Karen, you are on mute as well.
Want me to? Yeah, wait. Do that. Let's see.
Did I surprise you? Sorry.
Hi. Hi, everybody. Thank you so much. This has been great. So I didn't even realize that I was doing similar types of things. I never read the book, but I absolutely last year, my daughters had gotten married, and when they were getting like the year or two before they got married, I asked my bookkeeper to set aside money every paycheck or every time we had money, so that I called it the wedding account. And then after they got married, I told her to continue keeping the wedding account. So we built up a lot of money. I didn't do it so scientifically with an exact percentage, but I really like that concept. I'm a tax attorney in New York. I handle IRS and New York State tax problems. Last year we had an amazing year. I'm guessing that after all of this, everyone's going to have financial problems. I'll probably have a second, my second half of the year will probably be great because everyone's going to come to me with all their tax problems. You have you can delay all your taxes till July, but then after that, people are still going to have a problem because they're not making any money. So how are they going to pay any of their expenses, personally or in the business? So
Yeah.
I'm expecting a good second half of the year, but I like the concept of no matter what, putting some percentage aside every single week. And I do have a chart that my bookkeeper keeps, but we don't do it exactly this way. What we do is, I did not ever go line by line in my business to determine which expenses I should cut. I say, I have in mind, I want a net profit percentage of 35%. I want a third to be available. And so every single week, I have somebody calculate how close are we. And then when that amount is available, we then take it and some of it we put into separate accounts, like the quote wedding account, which I then last year put a chunk aside and invested it, which was nice. But then we also have other places that we want to put the money, not necessarily for investment. So it's not exactly these categories, it's not exactly these percentages, but it's a similar concept of separating the money, putting it aside. But I love this. I loved your charts. I thought they were great. I really appreciate that you spent the time to put all this together for us. I mean, how amazing was that with cute little pictures? How'd you find all those cute little pictures?
Well, actually, so like I mentioned to all of you earlier, this material has been created by the Profit First University. And so they train the consultants. And so the materials are already there. And the consultant also have access to assessment tools. And, going back to Philip, I would, love to be your accountable partner and would challenge you, what stop you from increase that profit into a higher percentage. And also, and I know it's feel good to be able to take out the money and treating your staff from the profit account. But at the same time though, I would hope that you would take out that money and treating yourself as well, because that's, you become to love your business again. I mean, I don't know how many business owners that would just like, I just want to sell my business. I mean, they get tired. And that's because, see, you get tired. And so that's because we take care of everybody, including our employees, and we did not take care of us. And we just put the money back into it. And going back to you, Karen, I think one of the that I respond back was, you're really using that metrics of being a service industry, really 35% of that would go back into net profit, if you didn't allocate an amount to the owner's comp, but that is the normal percentage. So you right on point there.
I agree.
And at the same time though, is where, you're looking back into the triangle that I have. Yep. And you now, because if you are setting aside that 35%, you can consider looking at your business and,
sorry.
Yeah. So going back to your business that is about, living a galaxy or making an impact or innovate, investing in those as well. So that's the beauty of the profit account. I love working with Mike because his mission is eradicate entrepreneurs' poverty. And so the profit account that's set aside is really used to help business owner to pay down their debts. Because I don't know how many people are there getting a line of credit and you can never ever get out of the line of credit. It's just going back and forth. But if you discipline into the profit account, you will eventually create your own line of credit for your business and completely debt free. So that's gonna be the beauty of it is help people to stay away from debt. There's a plan to pay off the debt. And so I love hearing both of your experience.
Well, one thing that I did learn, I have to say, from the Goldman Sachs 10,000 Small Business Program is to have a dashboard. And that's, I started that a number of years ago, which is every single week, we keep track of all key performance indicators, all the KPIs. What are our revenues? What are our expenses? What is our net profit? How many billable hours are the attorneys billing? How many phone calls do we get with leads? How many of them convert to a consult? And how many of them convert to an actual client that pays us? And we have target numbers of how many we want each week, whether it's dollars or calls. And then we try and come up with ideas on how to achieve that. So for example, we'll come up with a marketing idea so that we get the phone to ring a certain amount of times. And we've seen everything go up, 20%, I would say, in dollars and in calls over, the few years that we've been doing this.
Yeah. So how long you been having your business, Karen?
So I'm an attorney for 35 years, but next year I'll have my own practice 25 years.
25 years. And so for the last 25 years, what is your average growth rate has been?
I don't know over the whole 25 years. I could say the last few
Wendy.
years it's been 20% every year.
Can I hold just a second, everybody? I'm sorry. Because we're recording this session, do you think I should stop recording if y'all are going to go into this discussion so that we're not,
Sure.
we're planning
Sure.
to hold 1 second. Okay, I'm going to stop.
Thank you. That's very considerate.
Yes.
So give me 1 second. Only if I can find the button, and I am the IT girl, remember? So if I can find the button, that's
There's a button on the bottom to the right of chat. It says record. So what happens if you hit it? Would you unrecord?
Yeah, give me 1 second. See, it's not, yeah, start video, mute, remote controls. Yep, stop recording. There you go, found it.